Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. 270 points higher on the Sensex. The Nifty just not stopping, 11,535. And once again, the mid caps doing rather well. 112 points higher on that. 2:1. Advanced decline is what we have. Our technical experts are back. Ashwani Gujral, Mitesh Thakkar, and Prakash Gaba as well. Ashwani, your thoughts? You said that go long at the start itself. What's the trade now?
Well, more than the trade, I'll be donating today's profits to Kerala. So that way, we've taken profits off. And now we should see some sideways. But overall, the market remains extremely positive. Use declines to buy. And particularly this move on Infosys has kind of taken the market beyond this 11,500, 520 zone. So anything coming back into that zone again should offer you buying opportunities.
Okay.
For the moment, Yes Bank is a buy with a stop of 398, target of 415. Divis Lab is a buy with a stop of 1200, target of 1265. And DHFL is a buy with a stop of 678, target of 700.
Okay. Of course, a noble gesture, and everything will help at this hour. Ashwini, wanted your thoughts on Larsen & Toubro in particular. Is there a trade here? Is it positional? How does one approach the stock?
Well, see, Larsen has changed a downtrend with a gap. Now, often that's very positive, and from a significant support around 1230. I wouldn't be surprised if Larsen gets back to the 1430, 1450 zone.
Okay, so that's a 5.5% up move right now. As we were telling you earlier, a lot of brokerages have written post the buyback announcement. Macquarie has a price target of 1,825, which is still a big upside to where the current market price is. We also have Mitesh Thakkar and Prakash Gaba who join in. Gentlemen, morning to both of you. Prakash, what are the stocks that you would be looking at this morning? A lot of pharma stocks also rallying at the moment.
Yes, certainly. Pharma is bottomed out, so pharma should rally. I think it's really good here. But stocks that I like is, since the market is up to 11,660 to 11,676 zones, it should go there in a day or two. I think I like go with Century Textile. Looks good. Seen a good consolidation for 3 or 4 trading sessions, and a breakout has come in. I think it's going up to levels closer to 845, stop below 925. Risk reward ratio in favor. And I also like HDFC Bank. Looks like a bottoming out process is on here. Technical targets on the upside is 2120. Stop below 2080.
Okay, that's the big one, HDFC Bank. Mitesh, good morning to you again. Do you have an index trade now, and which stocks?
Yeah. So index, Lata, as I said, I think earlier in the morning, would be a buy at the open, given the fact that we are opening above the pivot of 11,480, and that was your stop loss. I would still maintain targets of 11,600 to 11,650. Coming to my stock calls, I have a buy on Yes Bank. It's moved up slightly, so on a rupee or 2 rupee kind of dip, should be bought or even at current levels. Keep a stop at 392, look for targets of 430, and Britannia is my second call. That's a buy with a stop at 66.20 or just below it, and look for targets close to about 6,900. And I think, a word of commendation for Ashwani. I think a very noble gesture on his part to donate profits to the Kerala flood relief fund.
Okay, fair point. Ashwani, just one more word on Federal Bank. Of course, this is the Kerala impact playing out, and it's a brutal fall now. I mean, if you take into account the fact that on Friday it was down, and now today also down about 5.5%. I'm talking about this stock because after last quarter's numbers, we saw that big gap, and the stock sort of saw re-rating. Now it's getting back to those zones. Your thoughts here?
See, the question I like to ask in bad news is Federal Bank going to close down? I don't think so. Yes, people may not pay back, etc. Whatever trouble is going to happen after that, reconstruction-wise, if somebody wants a loan, chances are Kerala, you will have a lot of business. So, last low was about 75 to 80. If it gets back there, I wouldn't mind accumulating, because, whatever has happened is history. Now you need to look forward, what are the opportunities that emerge from this sort of adversity. as an investor, I think if you buy around 75, 80, your downside is zero.
Okay. Point taken. Ashwani, we have plenty of questions for you, gentlemen, and we will keep coming back to you on the hour. Thank you very much for joining us now. And we are going back to that natural disaster which hit the state of Kerala. 2 weeks of incessant downpour and a resulting flood situation in Kerala. To take stock of how this could impact some of the Kerala-based companies, Madhu Nair, Chairman and Managing Director of Cochin Shipyard, joins us now. Good morning, Mr. Nair. I know these are tough times, but is normalcy returning to the port? Are you all operating over the last 24 hours in near normal terms?
Yep. Asif, we are in downtown Cochin, and the fact is, like, the city was practically not affected. So there's even been no flooding on the streets of Kochi over the last many days. So what you're seeing, like, the suburbs of Kochi, like near the airport, has been flooded, but the city, the shipyard area is, the impact, I should say, is zero, absolute zero. The only impact we have is employees traveling has been a bit difficult. So we are seeing much more lean attendance over the last couple of days. That's all.
Yeah, Mr. Nair, the concern is more with the approach to the port. I mean, your hinterland is affected. So does that slow down both inward and outward movement of goods? And will that affect your performance?
Not really. From the shipyard point of view, like we are not talking about day-to-day things like stuff coming in. So we are from a ship repair and shipbuilding point of view, I should say that the impact is practically zero. And today, like the roads towards Coimbatore, everything is open. So we are pretty back to normalcy. Last 2 days, yes, the suburbs were bad, and we had practically lean attendance, and we were participating in the relief activities also. So last 2 days, work was practically at a standstill here.
Okay, so 2 days you've seen work at a standstill. Mr. Nair, what exactly is the business that comes in from Kerala itself? I mean, if you could quantify it for us. And should we expect any losses at all because of the floods? I mean, you mentioned just 2 days of a standstill, but financially, any losses at all that we can expect?
Nothing. Absolutely zero. We have zero exposure in Kerala, basically.
Okay. Generally, global trade appears to be picking up. Is there any improvement in the flow of orders at all for you?
We have not yet seen this, but since you asked a pointed question, yes, we are seeing some sparks in the international arena. Pricing is a little bit stiff because Korea, Japan, and the better Chinese yards have got their orders till 2021.
Okay.
So we can actually see that the orders will come in. We are at least talking on a few potential projects. But then for these guys to move into India at this stage, they are expecting a notch lower than the international pricing. And this is a struggle through which we are going in. But I should say that there is some light we are seeing on the international shipbuilding part.
Okay. So domestic orders?
Domestic orders, we are not seeing much. It's basically the defense orders what we are having. So right now it's defense and Coast Guard. And on the ship repair front, things are going exceedingly well. Ship repair is doing exceedingly well.
So can you give us some numbers then? What is the order book currently and how much do you think it can grow to over the next 12 months?
See, we are like what we already signed and done, and what we have expecting to sign in the next couple of months is about 7,500 crores. And then we have the phase 3 part of the indigenous aircraft carrier slated to come in by end of this year. So we are all together, we should be 13,000 crores, fairly comfortable from a order book position. On the ship repair side, this year, in all probability, we should easily cross an 800 crore of turnover. Last year was a record for us at 623 crores. So we will definitely go very well past 800 crores this year. And ship repair is doing exceedingly well.
Okay. I think when you last put out your order book on 13th August, you said 4,600 crores of...
that's what we have signed and concluded. Okay. But there is this ASW Corvette order and the indigenous aircraft carrier phase three-part, which we are in discussions with the Navy currently.
Okay. And margins, will they be as good as 17.5?
We were around 16 plus is what I would conservatively, at the PAT level, 16 plus is what I would like to guide. It could be better, but I would like to guide 16 plus.
Okay, so this 800 crore turnover, you said, by when do you hope to achieve that?
See, we have a very large naval project currently in the company, which that single project is 500 crore plus, which will be fully realized in Q2.
Okay, realized in Q2. All right, Mr. Nair, thank you very much for joining us with all those details about Cochin Shipyard. Shipyard was not affected, so no changes in estimates. And of course, they depend on orders from the Coast Guard, from the Indian Navy. So the hinterland of Kerala not really affecting them. On that note, we're going to take a break. We're going to track the commodity market opening. That's quite important now, with some strong bullish notes coming in for the steel sector. Let's listen to what Manisha Gupta has to say in a minute after this break. Welcome back. It's time we looked at how the commodity markets are starting and what cues they are giving us. Manisha Gupta is with us. Go ahead, Manisha.
Thank you so much for that, Lata. Well, it really is about the global cues to begin with, where the crude oil prices have seen 0.25% of a decline, and that's because the global demand seems to be getting impacted with what's happening in sense of the cues there. Until now, it was only sentiment, but now the on-ground number shows that there is a decline, especially coming in for the Asian markets, and that for the longest time has been the fastest growing market in the international space. So Chinese imports have been declining. We have seen weaker demand growth hints coming in from IMF, OPEC and EIA as well, and that's taken the prices on the lower side to 0.25% down is how the crude prices in Indian markets also have opened. But as we see the global scenario improve, especially with the US dollar taking a pause, there has been some bargain buying that we've seen come in for the precious metal prices. We did see gold prices decline all the way to 29,100, but there is a gain up that we've seen in last 2 or 3 sessions. And today is further follow through buying in both the precious metals, especially silver, 0.5% of gains coming back there. But it is the base metal prices that you need to keep an eye on. The pause in the dollar rally has been supportive, and it also is about the US and China delegates meeting in this week, talking about the trade concerns is what has improved the sentiment in this market. So you have the copper prices trading off its 1-year lows. We also have seen buying come in aluminum as China reiterates that they would be putting output curves for a couple of metals, and aluminum also is in that list. Zinc prices have continued to decline. We have seen 1-year lows on that. The LME inventories have been increasing. Zinc prices already have declined 9% for the month of August. So that clearly is the most underperforming metal in all of that sector. Nickel is trading flat, but we have seen good gains in last couple of sessions. So some bit of a decline there. But it clearly is the steel prices that catches your eye. We are looking at 7-year highs on that. 20% up. Steel actually is the only base metal, or rather only metal, that is trading in the positive in 2018, and that too in double digits on the higher side. Trading strategies, and we have them from Angel. They have buy calls across commodities. They have a buy call in gold to start with, where they are expecting the prices to gain up to nearly 29,700. They also are advising buys in case of nickel and crude oil for the day today.
Okay, thanks a lot, Manisha, for that. But let's get back to equities now, because the stock that's surging is L&T. The board will consider a buyback on the 23rd of August. Remember, the details on the quantum and the pricing will be known only after the August 23rd meeting. But this sends a message that the company is willing to return capital to shareholders. And this is over and above the regular dividend payout. So that's something that the street definitely likes. Renu Baid, the President Research of IIFL Institutional Equities, joins us now to talk about that. Renu, good morning. We, of course, can't discuss the numbers because we don't know the quantum and the price. But in general, how would you approach this news flow, and what's your view on the stock?
Yeah, hi. I think this news flow is definitely positive. I think we were expecting that some kind of special dividends or buyback would come in financial 20 when the company would realize cash from some of the large divestments like ENA, others which are expected to close. But definitely a buyback coming earlier is a step closer to rewarding shareholders. If one sees, Larsen has been among the only cap goods stock where the dividend payout has been significantly larger compared to any other EPC company. So the buyback definitely is a sweetener added to that. And this will further help utilize the cash, which probably the company think would be in excess, and reward shareholders to that extent.
How much cash would
We are
they
positive
have?
on the stock.
How much
It's
cash
one
do
of
they have,
our
Renu?
top picks. At the console level, they have close to 16,000 crores of cash. But as in, based on the large inflows that we were expecting on divestments, we were expecting anywhere between 16,000 crores to 20,000 crores in F20.
Okay.
So as of now, as in the last reported financials, they had about 16,000 crores of cash at the console level.
Okay. You said you were positive on the stock. What is your target price over the next, say, 6 to 12 months? Because the stock has underperformed. It's been a relative underperformer over the last 2 to 3 months. But what kind of upsides would you have?
We see approximately 20% upside from current levels. 1630, close to 1630 is the target price for the stock. So, as in the recent underperformance, obviously, is based on the apprehension pre-election, like it's being a bit soft. But otherwise, from an outlook visibility perspective, both performance, I think Larsen has done a reasonable job in the first quarter. And hopefully, as the quarters go by, we expect the numbers to improve on the core business as well.
So, do you have any expectations on what the quantum and the price of the buyback could be?
Nothing at this point of time.
Okay. No, but the market, see, the share prices have moved up 6%. So what can satisfy the stock out of 16,000 crores of free cash that you say they have? What will satisfy the market to justify 6%? Yeah, it's total cash, sorry.
Well, we have to look out for details, Lata. I'm sorry, I don't have enough numbers with me right away.
Okay. All right. The other thing I wanted to ask, could there be a minor negative here? I mean, a company that is really a play on India's capex is returning cash. Does it not send you a longer-term signal that we don't have use for cash?
Not necessarily, as in the company has been, as in they have enough amount of cash, the capacities are there into place, and they are an EPC company, so they really don't need to invest into large assets. What you would need is to invest in capabilities, people, and execution, which is not capital intensive.
Okay.
And if one looks strategically, Larsen over the last 2 years has been clearly working to reduce the capital which has been blocked into assets and monetize that. So be it as in monetizing through IDPL, the InvIT route, or coming to divestments of non-core assets in the E&A space and the other businesses. So to that extent, they have been very clear that the excess cash partially will be used to deleverage their books, maybe some small acquisitions in niche manufacturing space, and the rest would be given back to shareholders through special dividend or buybacks, which will, at the end of the day, means that the ROEs of the companies are not impacted by cash on hand.
Okay. So, what about the capex plans going ahead? I mean, we do know that, they have the Hyderabad Metro project, which will be completed in FY19. So, some amount of capex will go to that. But after that, any major capex plans that they have?
Hyderabad Metro has already been committed. So, that will not require any incremental cash flows from the parent entities to that extent. So, from a capital perspective, I don't see as in any large capital outlay for them, just in line with the normal operational capex that they have been doing. So, clearly no large capital outflows there in place. And it makes sense for companies that if you have sitting on excess cash, instead of diluting ROEs, and if you don't need the business, cash for the next couple of years to grow the business, might as well return it back to holders.
Okay, fair point. Thank you very much, Renu. Okay, did you give us your price target?
Pardon?
Did you give us your price target?
Yeah, it's 1,630 rupees.
All right, so there's still a little bit of a distance to go after today's 6% rally. Thank you very much, Renu Baid, for joining us with your thoughts. As we wind down on Bazaar, we are certainly leaving the markets in excellent fettle. 0.5% higher and actually 0.8 higher on the Sensex. 300 points up. I mean, it's a big, big day on the Sensex. We are not done yet. We're going to take a break and come back with Saurabh Chawla, the Group CFO of DLF. He's joining in to discuss their Q1 numbers.